Hello friends, welcome to my channel and thanks for watching this video. Friends, every stock has an up cycle as well as a down cycle, and even though the overall or the big trend for any stock is on the upside, we can see corrections time and time again where the stock correct, consolidate, take a pause, take rest for some time before it will start again or it will make itself ready for the next move. Now what we are going to do in this particular video is going to analyze the long term chart of Lockheed Martin Corporation, and if you are looking at the overall chart, there is a clear cut fatigue which is visible as far as the long term chart is concerned, although you may not able to see it, but let me explain it to you why it's going to consolidate and correct a bit before it will start moving again or start moving up again. So let's start analyze the long term chart of Lockheed Martin, but before that, if you haven't yet subscribed my channel, just hit on the subscription button, also hit on the notification bell along with the all button to get my updated video notification. Now what do we have here? We have $454, which was the high of 2020, and similar levels has been tested in May 2022, and the stock is now trading below $454. Now there is one thing that you need to understand, that if the stock makes a breakout beyond $455 and start trading above that, the downfall may get arrested and the trend will reverse. But there are multiple things for that you need to take or understand about. Right now, if you are looking at the trend, and what I'm going to do, I'm going to just draw a line like this. Okay, so this is what we have here as far as the upper end of the range is concerned. Now as far as the lower end of the range is concerned, you have something like this here, right? Here we are, you have something like this. If you want because these are three immediate peaks, so that's why I have used this, otherwise you can do like this as well, right? Now what makes the difference and what are we talking about? So if you are looking at the long term chart, which it is right now, what you need to focus on is this MACD, and you can clearly see the momentum is on the downside. You know, the stock is making higher highs, but the momentum from 2018 onwards, it's been 4 years since then, and the momentum in the long term has been going down, which simply suggests that although the stock is moving up, but the momentum is clearly not supporting. Along with that, if you are focusing on this RSI, right, if you are focusing on the RSI, it is overbought and it needs to cool itself down. So what these two indicators are indicating about the stock: number one, it will go correct and test the low which will be in between, or which is in between $250 and $290. Okay, this is the first thing, that it will end up with correction. The second thing is here we are, that it will consolidate, and the consolidation, or the stock will be in consolidation for the next 2 years, or rather, you know, by till December 2024, before it started moving higher. Now these are the two practical scenarios that we have here right now. So if you are looking at Lockheed Martin as your next investment pick, you need to understand the way the stock is moving, and you also need to understand what will be the next probable scenarios that will evolve as far as the stock is concerned. Now the interesting thing is, even if the stock moves higher and let's say test $600. Then from $600 be ready to face a correction where the stock probably hit the low of 270 and 280 and till 300 or $310, $320 on the downside. So you just need to calculate your upside and then look at the downside, or rather wait for the correction or the consolidation to happen, and once it's over then look at this particular stock. So as a summary, you may clearly see and probably say that this is not a probable time to look at Lockheed Martin as your stock pick. So this is the end of the video. Thanks for watching.